CNBC sure has some very interesting articles. The first one, Euro will collapse like Tower of Babel. And I only have so many of the lines from the articles, and there's a link in the more information box. But it starts off by stating that Fed Chairman Ben Bernanke is widely acknowledged as an expert on the Great Depression and the policy errors that led to it, that intensified the economic and social misery. Now, this doesn't say he's an expert. No, it just says that he's acknowledged, and by a lot of people, as that. He might be, but this article could be truthful if he is not an expert, as long as many people would acknowledge that fact. With that being stated, if he is an expert on economic and social misery and how the policies would create depressions, then if he doesn't want one to happen, you could be rest assured it does not. Monument Securities chief economist Stephen Lewis has been looking at how the Fed boss may be viewing the Greek rescue package, given his expertise in the area, and he has identified the debt liquidation as the mechanism that drove a downward spiral in world economic activity 8 years ago. This is why he has been so anxious to limit any fall in U.S. private debt, while tolerant of a massive offsetting expansion in U.S. public debt. And he wants to have a preference for a gradualistic approach in cutting the debt over time. And that's very interesting how he wants to do that, because I look at policies. We talk about policies in here, and we have a policy now of monetizing the dollar system and the currencies, and guaranteed debt. I don't know the reason why they want to guarantee it. Maybe it's because they want to ensure the bankers of a massive profits. That's only speculation to why. But what is not speculation is how debt is guaranteed. This is mathematical proof. And we have this, and it also seems as if they have a policy in misinformation towards not telling us this information for. It wasn't explained to me when I went to college. No, I had to find out from alternate sources who had the information to how money was created. And the article went on. It didn't really explain too much how the euro is going to collapse, but we've been hearing a lot recently on the mainstream media how the euro is in such serious trouble right now. Such trouble. And it just seems as if they feel that this is unable to spread its way to the United States. And the final article, or the final sentence on the article states, "The guilty men are the Eurocrats who stubbornly refuse to recognize that their fanciful construction is collapsing like a Tower of Babel." Stubbornly refuse to recognize. And Greece, I guess that's the topic of the month. It's the story of the month. And we have to assume that even though the United States, who is living beyond their means, borrowing money they do not have, printing money that they can create so easily backed by nothing, that it's just going to be fine in the United States. And there was another article by Tom Brennan, but it states Jim Cramer, don't buy till down 9,000. So apparently what he's telling us is that it's going to sell off another 10+%, and that's when you want to get long. That's when you want to find the bottom. And the Dow's intraday collapse of nearly 1,000 points on Thursday offered a clue into what investors truly think of the market, Cramer said during Mad Money. In short, they assumed the move was legit and not some computer error. In the end, though, people need to keep in mind that the American markets and economy continue to improve. The U.S. is not Europe. So we were told by the mainstream media on Thursday that it was a fat finger typo. This was on Reuters, the Associated Press, all of these top reputable news sources. And I was stating in one of the one of the many videos that I was doing talking about it that, well, you have a story like this, and it just seems you're not creative enough to make it believable. And well, maybe you're creative enough to say the U.S. is not Europe, and well, that's true. Our markets will stop their decline sooner and rebound harder than any of the markets over there. And well, it's interesting because there was a video on this webpage, and I watched it. There was a caller. I think his name was Aaron. It was the first caller. And he mentioned how he bought Bank of America, and he bought it at a much lower price than what it's trading at. And he was asking, should I sell the stock? And he said, no, 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 hang on to it. Yet he's telling us not to buy till Dow 9,000. So is it possible for the Dow to go to 9,000 while Bank of America does not retrace anything? For if you truly believe not to buy at 9,000, wouldn't you have told the gentleman, sell the stock now and then try to rebuy it at a cheaper price when the Dow was at 9,000? No, they really do not do that type of stuff. And a lot of it was stating how, well, the Americans have such better monetary policies than Europe. And I guess if you go back to the first article, well, our chairman is widely acknowledged and an expert on the Great Depression and policy errors for that. So apparently, Europe is not as lucky to have a gentleman like Mr. Bernanke, which is why the Americans are clearly doing better. I mean, he was even stating that the unemployment is doing better, even though it is pretty much near their top at their numbers at 9.9%. Well, nonetheless, maybe he has actually not looked at the actual main street for how people have been doing over the last so many months and years. I don't know, because they say that the euro is going to collapse like a Tower of Babel, and if that's the case, maybe the United States dollar is going to collapse like a. Well, how about you give me comments telling me how you think the U.S. dollar is going to collapse like? Thank you for watching.